Welcome. My name is Beri Meric. I'm co-founder and CEO at Ivy and the chapter chair of YPO Metro New York. And it is my absolute pleasure to introduce all of you to Michael O'Leary and Warren Valdmanis. Michael and Warren, welcome. How are you today?
Good, thank you, Beri.
So glad that you're joining us. For everybody participating live and listening to this recording subsequently, we have a truly extraordinary, impactful conversation ahead of us. We're going to be reflecting on how we can all do our part to save capitalism for itself and create a better roadmap for a better future. So really excited to dive into this. Just a little bit about our guests today. Michael was on the founding team of Bain Capital's Social Impact Fund. Previously, he invested in consumer, industrial, and technology companies through Bain Capital's PE fund. He also served as an economic advisor, economic policy advisor in the US Senate and on 2 presidential campaigns. Warren is a partner with 2 Sigma Impact, which is a private equity fund that invests in companies that generate good jobs. He was previously a managing director with Bain Capital's Social Impact Fund. And before that, he invested with Bain Capital's PE fund for over a decade. So we're very fortunate to have Warren and Michael with us. Welcome once again, guys. Congratulations on your new book called Accountable, The Rise of Citizen Capitalism. I want to kick off by asking you, what led you to writing this book and what do you believe is so important about it?
Well, first of all, thank you, Beri. And as I think you correctly identified in our bios, I'm a little older than Michael. We met at Bain Capital. But the joke for Michael was it was my generation that created all the problems of capitalism and his that has to clean it up. And so it seemed natural that we would write a book together and try to figure out how to do that in partnership. Listen, the premise of the book is that capitalism is in crisis. But at the same time, capitalism is an incredibly powerful tool. It's done a lot of good historically. And our view is that it's critical that capitalists figure out how to save capitalism from itself. And there are a lot of books out there that talk about, virtuous entrepreneurs or autobiographies by virtuous entrepreneurs. There's a lot of books out there by academics that talk about what government can do to reform capitalism. But there's very few books actually that help entrepreneurs and business leaders and investors to think about what they can do themselves. So starting with just kind of the premise that capitalism is in crisis, half of millennials today prefer socialism to capitalism. And there are some good reasons for this. In addition, half of workers today can't explain why their jobs exist. 1 in 8 workers is so disaffected by how they're treated on the job that they actively work against the interests of their employers. And capitalism has produced, as it's practiced in the last 40 years, has produced some very distorted results. So, for example, in the city where Michael and I did much of our work together in Boston, there are 2 adjacent neighborhoods where the life expectancy gap between a rich neighborhood and a poor neighborhood is 33 years. So you have 33 years in the 21st century in America, 2 adjacent neighborhoods. That is a shocking statistic. So we've got a climate crisis, we've got an inequality crisis that I believe is rooted in workforce issues. And so there's this huge opportunity to take this incredibly powerful vehicle that is capitalism, that has lifted, in fact, 1 billion people out of poverty in the last 30 years alone, make it more accountable to people, to everyday citizens.
And Warren, just to dive a bit deeper here, but what's really at stake here? So if we don't reform capitalism in the ways that you're suggesting in the book, what do we stand to potentially lose, both societally, but also as business leaders who want our organizations to not just survive, but thrive? So what's at stake, if we get this wrong, and also if we do get it right, what do we have to gain? I just want to get your clear picture of that.
I'll say I'm a relatively recent convert to social impact investing. I've been doing it for now roughly 5 years. And one of the things I've discovered just in a micro level is that when you actually look for the power at the intersection of the social and the commercial, you find there's all these things that you didn't look for before. I think, for example, that private equity just has this enormous blind spot for worker issues. They see, private equity sees workers as sources of cost. if you look at workers as sources of places to invest, there's a huge amount of potential. So one thing is, Beri, that we're just missing opportunity. But I think the broader narrative and probably the most important reason why we wrote the book is that if capitalists don't work to fix capitalism themselves, someone else is going to fix capitalism for them, meaning government. And I think a lot of babies can get thrown out with the bathwater if capitalists aren't careful.
Warren and I, in writing this book, as he said, we're from different generations, which I don't think we recognize going in how important that difference would be. If you look at just, for example, how different generations view the importance of sustainability in investing. You see these stark differences where millennials, 90% of millennials think sustainability is important in investing, and it goes down to Gen X and down to boomers and down to the silent generation. But I think another area where Warren and I differ a little bit is also on the political spectrum. We wrote this book, as you mentioned, I come from a little bit of democratic politics. Warren probably comes a little bit farther from the right. But I think one view we share is that the risk is if we can't fix the corporations within capitalism to be more inclusive, to be more diverse, to be less unequal, to be more sustainable, if we can't fix those sorts of problems, then eventually the trust that has already been eroded in capitalism, already eroded in our corporations, will cause voters ultimately to throw it out. And I think that's a real risk we have now. You can just look at the crisis in trust that people already have. On the opportunity side, I'll echo Warren, and the one thing I'll add is if you look at the S&P 500, for instance, if you go back to 1960, 85% of the value in the S&P 500 back in 1960 was intangible assets, fixed equipment, land, property. Today, though, it's 90% in intangible assets, things like intellectual property. And so if you're a business leader focused on maximizing the value of your company, you have to be focused on not things like return on net assets or return on invested capital, these kind of balance sheet oriented statements. You have to be thinking about, how do I attract, motivate, and retain the best talent? And as we were talking about before we jumped on this meeting, the way you do that is by orienting your company around something that really attracts the top talent. And I think now more than ever, that's a deeper purpose rather than profit.
Excellent, guys. Thank you both so much. So to help us really get the big picture here, I would love for you to share, on the one hand, briefly, like what's, in your view, actually working quite well with capitalism already, like the not throwing the baby out with the bathwater, as Warren was saying. So what, you mentioned 1 billion people lifted out of poverty in just a matter of decades. Share with us what is working really well. And then let's switch gears to like, what's broken? Like if you had to really say, okay, what are the specific elements of what's just not working? So that will give us the launching pad into the solutions that you both have to propose. So let's start with that. What's working great? What's specifically not working? And we'll go from there.
If you ask the average American, what is the average profit margin of a company in the US today? They'll say something like 26%, 28%, something in that range. So for every dollar they spend at a company, they think 26 cents is dropping to the bottom line of shareholders or business owner. In reality, it's like 3 or 4 or 5%, low single digits. And the reason is because we've got this vibrant, competitive economy where companies have to compete with each other to deliver products that are valuable to consumers. And they have to do so broadly within the bounds of the law, the regulations that we have set. And I think in general, that system works incredibly well. It's like the old adage of like, the worst system except for any other that's ever been tried. Even if you look at the relatively socialist economies, say of Northern Europe, of Denmark, of Sweden, if you define capitalism by private ownership, free enterprise, free competition, all within regulations set by the economy, but private ownership of assets, in many ways, they are as capitalist or more capitalist than the United States is. Where it's broken down, though, is ultimately, markets operate in feedback loops. And so why is fashion the way it is? Why are there certain color cars? It's because that's what customers are demanding. And ultimately, private corporations should reflect the values and the interests of all of their stakeholders, of the employees they're seeking to attract, of the customers they're seeking to attract, of the investors who own them. But over the last 50 years, and this would be my assessment of what's the core of what's gone wrong. Over the last 50 years, we've bifurcated our lives into one part moral and one part economic. It's this sort of giving pledge mentality. Warren Buffett, Bill Gates have this giving pledge idea of life where you maximize the amount of money you earn during the week, and then you try and do the most good you can by giving it away on the weekend. And as a result, we approach a lot of our economic decisions we make, for instance, how we invest our money in our 401ks, our retirement accounts. We approach those decisions, but kind of leave our moral or our political or ethical reasoning to the side. And as a result, we have a bunch of corporations that, even though we collectively as shareholders control, don't actually reflect our interests. I as a shareholder care about, say, sustainability and inclusivity, but the companies I hold through S&P 500 index funds or whatever else fail to reflect those values. And I think the core of the problem is that we've now created a bunch of organizations that are accountable only to maximizing short-term profits, only accountable to the bottom line. And what you're starting to see, and what we write about in the book, and what makes us very hopeful, is people starting to bring their moral and economic lives back. They're trying to live their values, the economic decisions they make. You see that through things like the divestment movement, through consumer activism, through employee activism. And so we're starting to see it, but it's still small compared to kind of the core of the problem, which is that so many of our corporations are accountable only to short-term profits.
Excellent. Thank you, Michael. Anything to add, Warren? What are the other, anything else you want to mention as like fundamentally in need of fixing when you look at our capitalist system today?
I'll just say that, it sounds obvious when you say it, but one of the things that people I think miss is that capitalism is ultimately made up of corporations. And you read a book. Many of you on the call here may have bought Piketty's Capitalism in the 21st Century. I doubt many of you have read it, or at least read more than a few pages. It's excruciatingly dull. But in Piketty's book, he mentions the French Revolution more than he mentions corporations. This is a book about policy, and government can fix everything. And the truth of the matter is, corporations have played an ever increasing role in our day-to-day lives, and have a lot of power. And if we don't figure out how to make corporations more accountable, there's no amount of government regulation, frankly, in my view, that's going to fix the ills of capitalism today. And so our book starts with the premise that it's corporations that are the fundamental unit of capitalism, and that we have to look closely at what are the ways that we can influence them to make them more accountable to the needs that Michael described.
Got it. Thank you. So on the one hand, this importance of accountability and ownership focused on the corporate unit. On the other hand, this what you consider to be this artificial line between moral and economic decision making that's causing a lot of that's leading to a lot more short-term thinking, or has led to more short-term thinking. All right. So using this as our launching pad, let's dive into what you both consider to be solutions. Very specifically, let's start with from an organizational leader's perspective. So you're both investors. You've interacted with tons of different kinds of operators and lots of different industries, and clearly you're passionate about impact, social impact. So share with us, if you were to give us just a bird's eye view of what would be the key ingredients for corporate leaders who are serious about this, they want to make a change within their organizations. What would you recommend them to do? Let's have just a short bullet point list, and then we'll take them in turn to figure out how can they actually take action on these items.
Well, it's interesting, Beri, because our book has two solution chapters. One's focused on what corporations can do that's in their own enlightened self-interest. So I'll start with that, and then maybe I'll hand it over to Michael to talk about the second chapter, which is about how we can help drag the broader economy. We as citizen capitalists can help drag the broader economy in the right direction, which will further put the right kind of incentives in place for companies. The first thing that we identified, frankly, one of the first things I learned as a social impact investor is that a corporation without a clear sense of mission has a very, very difficult time setting strategy. And in fact, I'm working with a company right now, one of our first investments in this new business that I'm launching, that has a huge opportunity to clarify its mission statement. And that sounds really soft. That sounds like some newfangled idea that, social impact investors like me have come up with in the last, decade or two. The truth of the matter is the idea of setting a mission for a company is actually very old. Back when corporations were first founded, the first limited liability joint stock corporations had to describe their purpose in order to be chartered by the king or by the government. And today, that requirement still exists in corporate documents, and people just write to do what is lawful in the state of Delaware. That's the majority. Some version of that is the majority of what people put in their articles of incorporation. And I have found that when you actually get to the bottom of what your company's really designed to do, that chiropracts so many other things around strategy. And I was a strategy consultant for many, many years. And I find if you don't have a clear point of view, a clear starting point for what your company is designed to do, it's very difficult to talk about strategy. So for example, Michael and I invested in a gym business in our first deal in our Bain Capital Social Impact Fund. And that business was about service, bringing health through fitness to underserved communities. But they didn't have that in their charter. They didn't really know that was their mission. When they put it in, all of a sudden the management team was aligned. All of a sudden they had compensation that was aligned with that mission. All of a sudden they had frontline employees who were embracing it. Customer service levels went up. Ability to recruit executives went up. The company was marching in lockstep and ended up being a fantastic deal, a lot because they knew what they were trying to accomplish. That's the first thing. Second thing is you need to have a business model that supports that purpose. In other words, compensation alignment, clarity of objectives, which frankly is so much easier to do when you know why your company exists. So we talk a lot about businesses out there like Kaiser Permanente, for example, that only makes money from its patients when their patients are actually doing better from a health perspective. They've got a business model that's aligned as opposed to this sort of fee-for-service healthcare that we normally see. And so, for us, a lot of it starts with purpose, and then it comes to business model alignment. And then finally, the context in which you're operating in matters a great deal. And this is where the bridge between, corporations and the environment that they're in matters. Is figure out how to listen to your workers, listen to your consumers, and figure out how do you be truly responsive to their concerns. And Michael, maybe you want to talk a little bit about kind of the other side of that coin.
Yeah. So if purpose and business model are paramount, for us to be able to hold companies accountable to these commitments that they make, to the purpose they put in their charter, you need some objective, clear way to measure it. And so I think the third element I would add in there would be measurement, where right now, if you go to any public company in America, you can pull up their 10K, their annual report, you can see all these financial operational metrics. And increasingly, you can see environmental or social metrics that the company is choosing to self-report. Unfortunately, right now, it's sort of a wild west where they get to decide, what self-serving metrics, they want to report this year. They can change them next year. There's no standardization. There's no third-party assurance. And so, one thing that I think Warren and I believe we need to provide for companies to actually get them to transform in the ways that we see is clear, standard, intuitive measures of the social environmental impact they have. Things like, why doesn't every company have to report on its carbon emissions, or on the diversity of its workforce, or on the wages? What percent of employees are paid a minimum wage or above a living wage? Where are the health impacts of their food? The one example I would give is McDonald's has won the world's most ethical company award 3 years in a row, for which I am sure they were deserving of the honor by whatever metrics Ethisphere magazine tracks. But surely the health impact of eating McDonald's food was not one of those metrics. And so, focusing companies, clear yardsticks we can judge them against, all three of those things, purpose, business model, and metrics, will help us to kind of orient companies more around the public good while still keeping them privately owned, competing for profit.
Well, by the way, this metrics landscape is a wild west. There's tons and tons of ESG reporting standards. There's all kinds of different metrics providers. And fortunately, we see some evidence that that whole wild west is getting tamed. So just back in September, the World Economic Forum released, alongside the big four accounting firms, released a set of protocols that they think that all public companies could adopt. And it actually is a fairly practical document. It's actually stuff that companies could do with fairly, reasonable levels of effort. And we think would actually do a lot to get companies to be more accountable.
Excellent. Thank you both for those. So let's just spend a couple minutes to dive a little bit deeper in these areas that you talked about. So first of all, you talked about the, table stakes. If you don't have a clearly defined mission and purpose that actually your constituents are aware of, especially your employees, but also stakeholders in general, that seems like a pretty binary, like if your company doesn't have that or it needs a refresh of that, clearly doing that and talking about something more than beyond profit, what else does your company, what's the mission that you're looking for? So I think that's self-explanatory, unless you guys want to share some best practices for going about the mission. Then we talked about, many organizations are like this business model, how supporting the purpose. So share with us, especially from an investor's perspective, like how exactly should a corporate leader go about thinking about this, right? So, okay, we have our purpose, we have a certain business model that we make money. You're talking about better aligning things with your objectives. So share with us exactly how companies can do that and how they can best signal, to other stakeholders, including investors, that it's worth it.
Yeah, well, my favorite example of this, one we focus on in the book, is a startup in Silicon Valley called Earnin, which is somewhat of a good guy payday lender, if you can believe the term. And the way Earnin operates is they look at the landscape of payday lending, which the traditional business model is a true trade-off. The higher the fees the payday lender can charge, the more money comes out of the pocket of its customers. And it looks like this zero-sum battle where for the company to succeed, in some ways, they need to be taking more money from the people who can least give it up, people who are turning to payday lenders as a means of last resort. So into this, Earnin, instead of saying, payday lending, you can't do it, the only way to play is hurting your customers. Instead, they thought about how can we create a business model that aligns our goal of helping these people who are in kind of dire financial straits, who have short-term liquidity needs, short-term cash needs. How do we help them get the cash and at the same time grow a profitable business model? And here's what they came up with, is they figured out how to use a technological solution where they plug into the time and attendance systems at most companies. So on any given day, they can see about how many hours has one of their potential customers worked. So they know how much money you're going to get in your paycheck, 2 weeks from now. And if someone wants to cash out that money today, Earnin will just give it to them, no fee whatsoever. But they will then ask for an optional tip. They're creating what they call a pay it forward community or pay it forward business model, where they say, if you see value out of our service, you have the option but not the obligation to tip anything from $1 to as much as you want. And when they create that sort of trust with their community, the results are astounding. 80% of users tip. They tip something like 3 or 4% on average. If you then compute what interest rate would they have had to have charged to make as much money off of this pay it forward business model, it's not as wild as what other payday lenders charge, but it's high enough that they've been able to raise several $100 million of VC funding from top VCs in the Valley. And what it does is you think about what are the incentives now to Earnin. The incentives are constantly, how can I provide so much value to our customers that they will willingly give me more of their money in this very transparent, very clear, very fair way. Now that's a somewhat extreme example of someone who went into a nearly impossible business model and then tried to create something that aligned interests better. Kaiser Permanente is another example. Hard to solve the problem if you're thinking as an insurer because you make more money the more claims you deny. Hard to solve the problem when you think of it as just a service provider. You make more money the more services you provide. But if you're integrated, an insurer and a service provider, you make more money. You're able to keep your patients healthier for lower cost. Now, we look at the B Corp movement, the broader B Corp movement. There's now 3,500 companies that become certified B corporations, which essentially is a designation that says that you're trying to balance both earning a profit for shareholders, also having some designated good. And many of these are kind of subscale. They're small companies, they're startups. But I think where that community provides real value especially for bigger public companies, is they're innovating on these sorts of business models. And this is what we saw a bunch in the impact investing world, are these social entrepreneurs, young, smaller companies, family-owned companies that are looking at how can we innovate on the way business is usually done in order to better align the interests of us as business owners, but then the communities, the customers that we're trying to serve.
But Beri, as you know, there are a lot of kind of high-profile companies out there that have navigated tricky situations because they had clarity around their mission. The J&J Tylenol example, which I'm sure many of you have heard about. J&J had a very clear mission. It was literally engraved on the wall in their lobby that said, we are here to serve health for patients, and that was their whole mission. So how could they not recall Tylenol when they knew some of it could be tainted? Home Depot, to take a worker example, their whole mission was to try to provide high service levels to the DIY market, to the do-it-yourself market, which required having a trained staff on the floor. And the only time, the times when Home Depot has stumbled is when they've lost sight of that important mission of actually compensating and having great service levels on the floor. But it's not just those high-profile examples. You can take businesses that you normally think it would be impossible to see as an impact business. Payday lending. I was talking yesterday to a venture capitalist who's supporting a business that's trying to reinvent the collections industry. Our first chapter of our book is about a socially responsible strip mine. We have to look at this problem not just from the perspective of a few virtuous companies off to the side. We have to look at everyday companies doing everyday things and figure out how they can be more accountable. And frankly, one of the frustrations I have with the industry I'm in, the social impact industry, is that if you try to make the landscape too narrow, you're only going to have a limited amount of actual real influence on how the economy works.
Excellent. So maybe to just help us triangulate all of this, what would you guys say are, because the book is literally called Accountable. We keep talking about measurement here. So could you share with us with like some quote unquote killer metrics of impact, whether they were some of the ones announced at the World Economic Forum or just the ones that you think would be super helpful? Doesn't matter what your business does. Here are some metrics that seem to be good ones to put alongside your net profit margin to kind of help balance out like the impact you're having. So what are those potential metrics we should all keep in mind? And then also, like you talked about the pay it forward, compensate according to impact, share with us also like initiatives that help bolster those metrics. So again, everybody's looking at this from their own business's lens. So we're looking for like, what are the universal kind of things that seem to be working that we might consider adopting ourselves?
First of all, Beri, let me put in a plug for B Labs. If you're a small or medium-sized company, I actually think they've got a really good set of standards to help you evaluate where your company is. And also, the nice thing about B Labs is it has very clear pathways for improvement. I learned about this idea of mission in your charter through doing that in aspiring to become a B Corp. So I think B Labs is fantastic. But Michael mentioned earlier that all corporations should report on emissions. My focus is workers. I think all corporations should, at a minimum for internal purposes, have a very clear understanding of workforce health. There are increasingly all kinds of providers out there who will help you craft a survey that will allow you to listen to your workers and just see how they're doing. We spent in my current business months working on a version of that that we thought 8 questions we thought could help us figure out whether people had a good job or not. And we actually went and tested that survey and found that when you get the right kinds of answers to those questions, there's a correlation between that and things like innovation and service levels and productivity. And so our view is that measurement around workers is really, really critical, not just because we care about creating good jobs, but also because we care about making companies valuable for the long term. And I think that one of the biggest issues, one of the big root causes of the disconnection we see in our economy is just a sort of meat-headed short-termism that we see in the economy, where somehow an investment in workers is a cost, But if you go and buy a machine, or you invest in software, or you do something with tech, somehow that's an investment. And we got to get over that point of view and realize that you can make investments in workers today, in training and career pathing, and frankly, civilized terms of employment that will pay off over time, but will hit your P&L next quarter. We got to create permission for company leadership to actually make those kinds of investments.
It's also slightly different if you're thinking in the public company context, or if you're thinking for small business owners or founders or CEOs who kind of control it. Because in the public company context, we think a lot about things like the World Economic Forum, some full set of standards that all companies should adopt, that the big four accounting firms can hold them accountable to. Within the context of smaller companies, of startups, of founder-led businesses, what we come back to is whenever you're running a business, just purely from a financial or operational point of view, you never have a dashboard of 100 metrics or even of 50 metrics. You usually have a dashboard of only 2, 3, 4, 5 metrics that give you a good sense for the health of the company. And when we invested at Bain Capital, and we were having kind of board of directors level discussions, 90% of the time they only focused on those 3 or 4 metrics. If you own a restaurant, it's same store sales growth, it's gross margins, it's maybe number of new stores you're opening, but that's it. There's not more than that. And I think when you start, especially as a first step, when you start thinking about what measures should I be applying to my business on the impact side or on the ESG side, the same principle applies. There's really only ever 2 or 3 or 4 that really matter for your company. And so I come back to McDonald's, and you search their 10K, the words obesity, diabetes, it doesn't come up once, but a very simple, obvious metric that they could start tracking is what is the nutritional value of our food? Let's look at take a simple average or take a weighted average of our most popular items. What is the fat content? Compared to what the recommended value is from USDA. Something like that, and then ignore everything else. The rest, don't forget about carbon emissions, forget about or focus on their carbon emissions, wages, and the health impact of their food. 3 things, and that's it. And I think for us, you go to someone like B Labs or one of these other nonprofits that will help companies think about their ratings, but then as a business owner, really focus on the 2 or 3 that are most connected to their operations, most connected to their mission.
All right, excellent, guys. So it sounds like there's like the emission environmental impact related topics we could think about, based on our businesses. There's the ones around workers' well-being that Warren was describing. So using one of the survey methodologies out there to just see, okay, how is that tracking over time? And then it sounds like, the third area, more broadly speaking, is like your impact on the consumer. So in the case of a fast food company, that could be the health impact. But for all companies, like there's some well-being or satisfaction being delivered. And I would imagine like that's a huge indicator of the long-term health of a business, is how happy are the consumers? Because we might be consuming something that also doesn't make us feel so great over time. And we rate the experience, right? Which gets into that. So I think you've given us good thoughts here. Also, like that suggestion to look into the whole B Corp movement, B Labs, and so on, just to see how we can, even if it's small steps, inch our way forward. Want to quickly switch gears here and think about it from, on the one hand, on a very micro level, at an individual scale. What could consumers be doing? What can individuals be doing on their side? And then on the very macro scale, as much as obviously, it's contentious what the government should be enforcing as opposed to companies self-adopting. But what do you think are some things that governments have been doing that seems especially promising to really, enable, not just like hold capitalism back, but actually invigorate it in the right way going forward? So let's start with the individual level, what we could be doing, and then at a governmental level. From there, we're going to jump into audience Q&A. So everybody participating live, try to think about, what would most make an impact for you in a quick question, and we'll start diving into them in a few minutes as well.
I do think, on the individual level, we collectively set the context how, the environment that corporations operate in. And it was funny when we were writing the book, and Michael and I were talking to some of our advisors about how much is in the enlightened self-interest of corporations to do from a environmental and social perspective. And someone brought up the idea that, well, what if you're Gazprom in Russia? Does it really pay to be environmentally sustainable? And the answer probably for Gazprom in Russia is probably not. They may operate in a context where, bad behavior isn't punished and good behavior isn't rewarded. But in America, the world is shifting fast, where we're creating more rewards for companies that are forward on ESG issues and more punishments for companies that aren't. And I think it's not because a Burger King cares about land animals or emissions related to land animals. Right? They launched the Impossible Whopper because consumers demanded it. And so, Michael and I spent a bunch of time thinking through what can we do in our everyday lives as consumers, as workers, as investors, and as voters to help create a context where corporations need to move faster in the direction of sustainable behavior. And it is my conviction that if you want your company to be more valuable in 5 years than it is today, you better be on your front foot on these issues. Because I think I personally think the context is going to continue to shift, and I think COVID has been a great accelerator, particularly on the S issues, on the social issues in ESG. But our book also enumerates a number of tools for how you can do that. For example, we talk a little bit about Wayfair, when employees created a big ruckus at Wayfair because they didn't like the fact that they were selling beds to detention centers for illegal immigrants. Increasingly, you can see worker voice gaining prominence in lots and lots of companies. So don't be silent. Figure out a way to have your voice heard at work. And we have similar tools from a consumer, investor, and voter perspective.
I think it's the risk though is that you walk down the supermarket aisle and you're torturing yourself over which brand of organic peanut butter is better for the world or worse for the world, and it's got a million different labels on fair trade certified. You don't quite know which ones you can trust, which ones you can ignore. And I think it was that sort of fatigue of having to torture ourselves over every single little decision and trying to perfectly align our values with our economic decisions that caused Warren and I in the book just to step back a little bit, to do the research and say, if I look at all the economic decisions I make in a given year, or even in a lifetime, all the economic decisions I make, not all of them are equal. The job I choose to take is probably 1 million times more important, or 1 billion times more important than what brand of peanut butter I buy. And when you look at the world this way, you see well, first you can separate out, there's all the money you spend and there's all the money you make. And those two things over the course of a life are about equal. And so one decision, where you choose to work, what job you choose to take, what you do in that role at that job, how you make your voice heard, that's probably the most important economic decision that any of us will ever make. And as Warren was mentioning with Wayfair, you're seeing employee activism just over the last few years really gain traction. You see it most in companies where employees have a lot of power, like software engineers at tech companies, but you're seeing it grow across. GM, for instance, had a big walkout over pay disparities. Alphabet had a big walkout over sexual harassment claims. And so I think that's one area where companies are realizing, we've got to bend to the values of our employees. We can't ignore that. So that's one big area. When you look at how we spend our money, there's again a few decisions that outweigh a lot of others. One big one is how we choose to commute, whether that's public transit or through a big gas guzzling SUV. Another one is where we choose to live, how energy efficient is the home we live in. Another one is where we choose to live in terms of the country. There it is. If you drive a Tesla, so one of the funnier insights someone brought up to us. If you drive a Tesla, that car is either ultimately powered. It's always powered by electricity, but depending on how the electricity is generated, a Tesla in West Virginia is a coal-powered car. A Tesla in Washington is a hydroelectric powered car. Because it depends on where you plug it in. It's the same thing for where you choose to live in the country, there are just areas that are more environmentally sustainable than others. And then finally, the last kind of major bucket of where you how you commute, where you live. Another major bucket is how you eat. Another huge part of what we spend our money on each year. And that doesn't mean having to choose product by product, but if you choose just in general, if you've got the resources that you can say, I shop at a supermarket that in general prefers organic, the Whole Foods of the world, or in general go to farmers markets when I can. Little meta decisions like that, you can then forget all the little things of is this takeout container compostable or recyclable, or is it trash? If we can make the big decisions right, we can forget about the rest.
Try telling that to my 16-year-old, but
Exactly. All right, awesome. And just in one quick minute before we dive into the audience Q&A, so we talked about the individual decisions, and Michael, you said it beautifully. It's where you work and make your money, and then where you go ahead and spend your money and time. So I think that gave all of us some kind of adjustments on like where we could maybe, or like some refinements we can make. Let's now quickly switch to the role of government. Obviously, this deserves more time, but in a nutshell, what do you think are the best next steps for governments to encourage this kind of behavior without messing it all up, by overcomplicating, overregulating? To me, it seems like, more than any regulation, just like social taboos and social expectations seem to be like working. Like somehow there seems to be a virtuous cycle right now where like companies that make great decisions, there's increased consumer demand for responsible companies, and it seems to be building on itself. That doesn't seem to be government mandated. So why do we need the government to do anything, if anything? So let us know.
Yeah, I would just point to a couple things that only government can do. We are the founder of Bain Capital's Impact Fund, where we both worked. It's the former governor of Massachusetts, Deval Patrick. He loved this Barney Frank quote that government is the work we choose to do together. And so when we were thinking about what solutions are really private sector led versus public sector led, we thought about, well, what are those things that we can only do if we do together through government? One of those is, as you were saying, companies are making these great commitments. They're being rewarded by the market. It's in their enlightened self-interest. But just with financial metrics that are regulated by the SEC and have these partnerships between public and private sector for how financial reporting should be audited and all of that, we need the same thing for social and environmental metrics for big public companies. So mandating metrics would be one. There's a lot that happens in the financial system that is regulated by government that, depending on the decisions that the government makes, can have a positive or negative influence on companies. For instance, you think about tax policy. We already have different taxes depending on how long you hold shares. And that might be, we could set that line at if you hold shares in a company for over 1 year, you get long-term capital gains, and under 1 year, it's short-term. You could also say, and if you hold it for under 1 day, it's a different tax rate. If you hold it for under 1 hour, it's a different tax rate. These are decisions we make in tax policy that make a big difference. Same thing with earnings guidance. Many companies today will publish guidance for what they think their earnings will be next quarter or next year. We can make decisions on, is that good for the economy, bad for the economy, to have that sort of short-term earnings guidance, or should we just have companies report on what they think their next year or next 5 years looks like? And then the big ones I would focus on, on the work we can do together. The three I'd say are first in pricing externalities. So right now we are essentially subsidizing burning of fossil fuels by not putting a price on the fossil fuels, the carbon that is emitted into the atmosphere. But that can also be on things like if a company pays such low wages that its employees are forced to use public services like Medicaid, we could consider that. We could choose as a country to consider that an externality that the company is forcing on society, and therefore price that externality for the company and say, if you're going to pay your workers so little that they use public services, we're going to add a little bit of tax to cover those additional public services. So price externalities. Second would be providing public goods. There's certain things like basic research that is in no individual company's self-interest to do, but is in the broad public interest that someone pays for. And a lot of the advances we've had in basic technologies, things that led to cell phones, for instance, have come from public research and the government funds. the price externalities, public goods. And the third would be something you're seeing just now, is enforcing fair competition and fair bargaining in private markets. And so we just saw that the Justice Department is suing Google on antitrust concerns, taking actions there. And same thing on fair bargaining. You might just take the view that individual workers will never be able to bargain with big companies for a fair wage. There's just such a mismatch of power and of desperation, and therefore it makes sense for a government to impose a minimum wage or a living wage by jurisdiction. These sorts of things, no company is it in their best interest to do, no individual or nonprofit or academic institution can do. It makes sense for the government to do together.
Excellent, Michael. So essentially tax incentives to encourage positive long-term thinking behavior, charging for externalities that companies typically don't pay for, and enforcing fair competition so that the monopolistic tendencies don't distort the market. Very cool, but you've given us a ton of things to think about at an individual level, corporate level, as a government level. I'm going to dive into the audience questions here, and we'll try to do our best to get through all of them. First one is from Lewis Ward, who asks, how important is it for buyers, whether it's individuals and companies, to understand who they're buying from and switch to providers and vendors that are quote unquote accountable? If nothing else changed except who buyers spent their money with, if they all went with accountable, isn't that the entire ballgame? Companies and governments would be powerless to stop that change. What do you think?
Well, I'll just say that I think that's a very astute remark, and I think if everyone were able to do that perfectly, that would be pretty close to the whole ballgame. I think the challenge is the one that Michael described, which is, many of us lead busy lives, and to torture yourself over every decision about about peanut butter in the supermarket aisle is a practical impossibility for many folks. That doesn't mean you shouldn't try. And there are increasingly, services that can help you do that and kind of figure out in general which kinds of brands, or if you care about certain issues, which kinds of brands are more aligned with those things. But I would say that, my general view is any of these tools done perfectly, government done perfectly, purchasing done perfectly, investing done perfectly, any of these tools could be the ballgame, but none of them will ever be done perfectly. And so we need to be pulling on all the different things at once. And so, I started from a place, listening to Michael talk about all things that government can do. I started from a place thinking, the less government does, the better. After writing the book, I kind of came to the conclusion that there are things that it's in the interest of people to do together in that way. Similarly, I think it's really important, how people invest their money. I think it's really important how people behave on the job. I mean, if you don't have the luxury of choosing your employer today because you've been employed for a while and you can't switch for whatever reason, you may be able to at least register your point of view with your employer on certain issues. So I think that all these tools matter, and any one of them on their own can be very powerful, but I think we need them all.
Excellent. Thank you so much, Warren. Next one from Bill Best. He says, we hear so many labels thrown around in America, in particular capitalism, socialism, without regard for nuance or really understanding what these words truly mean. Politicians have made these buzzwords to derisively label their opponents, leaving truth and understanding behind. Please comment as it relates to what we've been discussing here today. And this is just my addition to this, is also like, how do we get past these labels and really talk about what's really underlying here, which is people's ability to exchange in a way that is for the best of everyone. So please let us know what you think.
I mean, it's amazing, depending on the audience that Warren and I speak to, these same sets of ideas can seem like we are, Ronald Reagan, Milton Friedman, free market acolytes, or that we're socialist, European style government control advocates. And it shows how much of these sorts of terms have been politicized, where even something like the term sustainability or the term stakeholder capitalism, these things that were very clearly formed to be descriptive of something objective in the world. Stakeholders are workers, and it's a shorthand way of describing all the different workers, communities, and customers and suppliers, all the different people who have a stake in a business. And yet, very quickly, I mean, it can happen over the course of weeks, happen over the course of months. these terms get to be associated with a broader point of view and can make it difficult then to drive change. So one thing I focus on, Warren works in the private markets. I'm now working, investing in the public markets. And so I have to think a lot about how do I convince other shareholders to come to this point of view. And as a result, I have to think a lot about what sorts of language or terminology do I use? Because for a lot of people, if you come in saying, ESG, environmental social governance, ESG is the way that you need to build corporate value over the long term, they kind of roll their eyes and they say, oh, that's just happy talk. That's feel good marketing. I'm a real investor. I don't care about things like that. And so instead you have to come in and position things as focusing on workers and focusing on climate resilience and being prepared for different climate scenarios. And I think one way to get around this sort of politicalization of these terms is by being as tangible as possible and focusing on things, some like the metrics we're talking about, focusing on things like if you invest in your workers, this research shows that retention goes up and motivation goes up, which then shows up in greater long-term shareholder value in these very tangible, measurable ways. And the more you can focus on those sorts of specific scenarios and specific companies, I think the less it gets brought up to this socialism versus capitalism level where people dig in their heels.
Excellent. Thank you so much, Michael. Here's one from David McHugh, who asks, as partners and co-authors, do you have a mission for your work together that you can share with us?
It's funny that you asked that question because clearly we should have been more explicit about that up front and taken our own advice. I will say though that we talked about this a lot, and frankly, a lot of what we wanted to do in writing this book was to foster discussions like these. We think these are important issues, and the book Accountable, we hope had some answers. We're conscious that it definitely does not have all the answers, and frankly, if we succeed in having more people like the folks on this call debate these issues, think about these issues, and perhaps change their behavior on the margin, we'll consider the book a success. So I'd say that's, at least from my perspective, and Michael, you should comment. But from my perspective, this is we're living the mission at this moment.
Yeah, and one thing we very explicitly wanted to do is it's very easy for these sorts of discussions to get trapped in an echo chamber where you write a book that all the converts nod along to, but doesn't actually win anyone new over to this point of view. And so we very much wrote the book where in the back of our mind were all of our old colleagues at firms like Bain Capital, who I think approach all of this with a sense of skepticism, if not outright cynicism. And so what we wanted to do with the book was to create the arguments and the justification that would appeal to folks who aren't used to thinking about business in these terms, who might be used to this kind of traditional view of no, business makes money. That's not a bad thing. The good thing is we can donate money. Our government's separate from that. And we tried to create something through this book and our work since then, and try to convert some of those folks into seeing the light a little bit on what business is capable of.
Absolutely. What an awesome mission that you guys get to work on together on this front. So I've got one request to the audience before I ask you one final question to help us wrap up. So for everybody who is participating in this, whether live or in the recording, based on everything you heard, I think we can all reflect on what's one change, one action that we can take based on everything we heard. Michael and Warren gave us a lot of different things to think about, but one critical thing. So in my case, I'm thinking about just revisiting with our team, given this is our mission, and given these are the metrics we focus on most, what can we do to just communicate them better with all stakeholders, not just with some and not with others? And how can we build on this? So this is an exercise that we'll do internally here. Everybody must have their own version of that. So I highly encourage you at the top of the hour, before you dive into your next Zoom call or what have you, just try to write that down and take action on it. So that's my call to action to everybody. Turning it over to Warren and Michael, please share with us, how can we best stay engaged with your work? How can we as a community best support you and your endeavors? And finally, if you have one final word of wisdom each or a call to action, please share that with us as well. And that would be much appreciated.
Why don't you go first, Michael?
So the best place to stay up to date with us is at our website, www.accountableforthebook.com. And we post all of our most recent work up there, and we'd love for people to get engaged. We got a newsletter or a email list that they can join. For one final parting word, I think for me, I've got great hope. We talked about before the call, Beri, you and I are of a similar age. Millennial generation tends to put more emphasis on these sorts of values, on the sense of having a deeper purpose at work, and maybe bring back together some of the moral and economic lives we've otherwise bifurcated, otherwise separated. I think that gives me great hope, and I would say we are seeing a lot of commitments in this direction from companies and others that are worth approaching with skepticism, because companies do a lot of things that are hollow and that are meant for marketing and not fundamental. And so it's worth approaching with skepticism, but ultimately with idealism as well, and understanding that corporations, for all the harm they have done, they're just organizations created by and populated by humans, and so are capable of doing the sorts of things that we need them to do, as long as we can hold them accountable to do them.
And I guess, Beri, my appeal is maybe to the sort of 40-somethings in the Zoom. If you were like me, you were schooled in this idea of the invisible hand, the sort of Adam Smith thing that, like, if you just go and kind of build big companies and have them make lots of money, then that'll be good for the world. I think that's true sometimes, but I think it's really important to challenge yourself on that dimension, and really ask the question, can I give that invisible hand a little bit of guidance, so that all this effort that you put into your job actually leads to something more than just the sort of short-term immediate interest you're trying to satisfy. And I think there's a huge amount of potential. When you ask that question, you start opening lots of doors. So that's where I put my trust and my faith, and I hope some of this discussion will have people think about that question more.
Absolutely. Adam Smith himself was also renowned as a moral philosopher as well. So he certainly didn't separate these topics too much. So thank you for that reminder, Warren. Thank you, Michael. Thank you for all the thoughts you guys shared today. I think you're doing critical work. And again, if it just nudges some individuals and some companies just a little in the right direction, it can really help move things much, much better and faster in the right direction. So really appreciate having the opportunity to spend this hour with you, and excited to support your work going forward. Thank you, guys.
Thank you, Beri.
All right, all the best. Thank you, everybody, for joining us. See you all again soon. Take care.